and gentlemen, in this week's video, we're going to explore a few things. One, why our retail REITs continue to slump? Now, first and foremost, retail REITs basically ended well until the early part of February, and then they have actually eased off for an average of 8%. Why is the slump continuing? Point number one. Point number two, specifically, is Mapletree Pac Trust. A lot of trusts, a lot of investors have placed their trust in this REIT. Why have this REIT continued to slump after 3.5 years after merging with Mapletree NAC? Did the promises of the merger materialize? Well, it's something for you to judge. And thirdly, essentially, in the recent Berkshire Hathaway meeting, I think Charlie Munger once again very clearly said out that it is when companies do dumb things, stupid things, that's where it creates opportunities. So in this video, we would love to hear your view whether the actions of the merger between Mapletree Commercial Trust and Mapletree NAC Trust that was done 1.5 years ago had created this dumb decision by some of the better minds in Mapletree, and something for you to judge, because the share price has underperformed for already 3.5 years. And then fourthly, we're going to talk about essentially how long will this retail slump continue, and essentially the fifthly, we're going to talk about and guide you through one particular exercise that I think is very important for you to steady yourself to be able to see through essentially some of the dumb decisions that the real estate investment trusts do and protect yourself as an investor. Take a look at the share price chart of Mapletree Pac Trust, ladies and gentlemen, for the last 3.5 years. You notice that over the course of 3.5 years, since the high in January 2020, where the share price hit a near 250, the share price have slumped or collapsed by 33%, down 81 cents to hit a new low below 170 as of last Friday price. That is actually early part of May. What gives? What has caused this? But more importantly, again, you look at the green line, which shows a downward slump, okay, in the share price since they announced their proposed acquisition of Mapletree NAC on the last day of the year 2021. Something that we think is very funny, because essentially it gives investors very little time to digest those news. And true enough, at the proposed price of 2.08, where is the price now? Nowhere near 2.08. In fact, since the share price merger, you have noticed for the last 1.5 years, the share price don't even come close to the proposed merger price of 2.08 at all. In fact, right now it's down to 169. You can see it's very far away from where it was. So what gives again? As I said earlier, in the recent Berkshire Hathaway meeting, Charlie Munger again minced no words. That is, he says that dumb things are done by even sometimes smart managers. So while I actually admire the management ability of many of the Mapletree management in the last couple of years, in the recent years, have they actually made dumb decisions like this particular merger? Well, let me know your views. Put your comments below. Okay? But more importantly, well, if this was a dumb decision, has they not created, therefore, an opportunity for Mapletree Pac, since the share price has been in the doldrums for the last 3.5 years? Once again, let me know about your views below, because it's something that we will cover in our GCP Global class, in Reits class, in our next class in 2 weeks' time, on the 27th of May. Mapletree. Now, this next table shows you all the performance of the retail REITs. You notice that since the October lows, most of the REITs have rebounded. They hit a high on the 3rd until the high on Friday, 3rd of February. And then for the last 3 months, they have been slumping down. On average, they're down by 8%. The worst performer is CapitaLand China, that's down 12.8%. Mapletree and PAC in particular is down 7.14%. Is it so hard to understand why Mapletree NAC or PAC has not done well? Very simple. Just look at the results. Like we always tell GCP Global students, the numbers don't lie. What is the number? Take a look at the latest quarterly update. That is actually for the 4th quarter year-end FY 2223 for Mapletree NAC. Well, all the numbers, gross revenue and PI are actually up. That's because they combine. The merger of Mapletree and NAC, nothing fantastic to scorn about, or to boast about. But what matters most to you, Mapletree PAC shareholders, is the DPU. And what do you get there? Yes, I've highlighted there. What matters is that the DPU have hardly increased. It's flat. Flat, ladies and gentlemen. And what excuses have they give? Okay, well, compare this to this next slide, which shows you essentially the proposed merger at 0.5 when they actually announced the proposed merger at the end of the year 2021. What did they say? That the combined entities will be able to help you to enhance and boost your DPU by as much as 6.8%. You'll be thinking, holy shit, First they tell you 6.8%, then now it's flat. What gives? Okay. I mean, of course, if you do ask Mapletree, attend the AGM and ask them, well, how come the huge disparity of underperformance? They will point you to the 8 assumptions. You notice that in that slide, there are 8 assumptions that they made. Yes, REITs make assumptions all the time. Only time will tell, ladies and gentlemen, whether they are able to deliver on the assumptions. Well, the results may have come out because one, the assumptions were too rigorous, were too optimistic. Well, in the first place, it had to be optimistic to justify. The merger, isn't it? Which we at GCP Global will always analyze for you. And this is something that we have told our GCP Global investor students when the announcement was made. As well as even before that, when the share price 250, stay clear of Mapletree and PAC, simply because the prospects were diminishing, fundamentals were worsening, and that merger is one of the not so smart decision that the management has done. And most REIT mergers have not resulted in positive DPU accretion, as our Business Times interview, in just last month. That's what we have actually iterated. And again, this merger is a point in case that the merger has not resulted in positive DPU growth for shareholders of Mapletree PAC. Henceforth, the share price of Mapletree PAC have continued to go down and slumber. And then you look further, ladies and gentlemen, because of the merger with Mapletree and AC, right now this Mapletree PAC has this whole plethora of foreign assets, including Festival Walk in Hong Kong, the office building in Gateway Plaza in China, Sandhill Plaza again in China, Japanese properties under Mapletree NAC, which the sponsor basically stuffed into the REIT previously, and the Pinnacle Gangnam, which is in Korea. Look what happened, ladies and gentlemen. Again, box up in my purple box. You notice that all the properties in these various regions suffered a huge negative variance. That means a huge drop in the value. For example, if you look at Festival Walk, it suffered a 271 million drop in value, or 6%. All in all, the overseas properties are valued at 31st March 7.7 billion rather, but the total variance or drop in the value of valuation is 456 million. That's huge, and ouch. And that's why, and not surprisingly, why the share price have continued to go down. So once again, ladies and gentlemen, this is another episode of Show and Tell, which we basically will be able to explore further when we speak at this week's and invest, or rather Reits symposium at Suntec City, my segment. Is at 5 p.m. Just come down where you can get a good free preview of how we present and grill REITs, way in advance before the fundamentals deteriorate, and how we actually have been able to forewarn on these eventualities of REITs to our GCP Global investor students in our classes. You get a free preview because our investor students basically comprise the family offices, the people with high net worth, and investing big in real estate investment trusts. And then, if I may, go on to the last questions. That is basically, how will retail REITs respond? Well, essentially, how long will the slump continue? Okay, so if I may, I just want to tell you that we will address this in detail in our next investment class on 27th of May. Do join us, sign up for the early bird special. In it, we are going to talk about a few things. That is, what are the turnaround catalysts that we see in the retail slump on retail REITs? After all, they've been in the retail slump for a while. We have avoided it, and as what Charlie Munger says, that sometimes REITs do real stupid stuff. Okay. And that's where they create opportunities. Where do we see the opportunities in the various real estate investment trusts now that the prices have continued to slump? And how will we think when the catalyst happen for the retail REITs, essentially how the retail REITs respond? Because when the share price are able to finally outperform, that's where you want to be in it before it happens. So once again, hope you enjoyed this week's video. Come down and join us for the REIT Symposium 2023 this particular Saturday at Suntec City. Adios, amigo.